NSE and CNBC-TV18 present Prosperity Day.
Hello and welcome as we celebrate the NSE Prosperity Day on 25th of every month. With 25 years in existence, National Stock Exchange of India has played a key role in connecting India with itself and integrating the nation with other world markets. To the point that where today it is country's biggest stock exchange and one of the largest exchanges globally as well. As we are into the thick of run-up into elections, we get you market experts to tell you on how to deal with the event in your financial planning and how to turn the market volatility and uncertainty into an opportunity. Here is, first of all, a quick look at how the markets have fared in the last 5 financial years. The Nifty has risen nearly 70%, but in dollar terms, the Sensex is up 47%. The banks clearly have been the top performers over the last 5 years, rising over 132%. So clearly, Nifty Bank has been the best performer when it comes to sector performance. The market capitalization of stocks listed on the BSE stands at 74 lakh crore rupees. This has doubled since 2014. How will election impact all the markets? Since 2004, when the UPA 1 took charge, markets have always managed to gain after the election result was declared. This was the same case in 2009 and in 2014. So will 2019 be any different? We will ask all these questions and more to our experts who join us on the show today. Joining us first of all is Vikas Khemani. Vikas, hi, thank you so much for joining us. What has been your sense really? Because markets have been quite volatile. We also have seen the run-up in the equity markets already be there. What is your sense on from here on, what will the markets really be doing?
Hi Manisha. I think elections are a very, very important event. There's no doubt about it, and I think anytime specifically a significant event like this happens, market tends to make its own hypothesis and based on that has its own movement. But if you see this 2019 election also is very, very key election, and last 2014 also we had seen pre-election rally happening in expectation of NDA government coming. So it's always what background markets are coming in, and then what's the significance of the event. I think we just recovered from the ILFS crisis and or are recovering from that, and markets want continuity of the government, and as the hypothesis around the continuity of the government is getting built, I think markets are being more and more comfortable. But one must remember that markets never operate in isolation of one event. It is always combination of multiple events, fundamental as well as technical. I mean, we are in a very, very, very difficult period internationally from economy wise. Domestically, we just recovered from a big crisis, and election is also a very important event. So only giving or taking credit to one event is not going to be very easy. But having said that, I believe that India's story remains very, very compelling and long-term story, and investors should look at investing into markets over next 5-6 months in a reasonably systemic way, because I think we just had this deep correction in the market. It's recovering from there, and problems are not over. Even if the election outcome comes favorably, it will take time for the economy to really come back in a full shape. So I think we have 5-6 months period before market really takes off. So I do believe that investors should sort of pan out in terms of investing, because the interplay of the election as well as the global economy will always be interesting to watch, and it will definitely keep volatility at high.
That point is well taken, and I take your point that next 5 to 6 months one should be investing in a very systematic way. So Vikas, how would you advise parking money? How much should your portfolio be in the large caps and the mid caps? How much cash should you keep aside? Small caps, etc. Small caps, of course. How would you advise allotting money in all of these areas?
So honestly, I don't look at markets or investing specifically in terms of caps, mid cap, large cap. I look at investing in terms of good quality businesses, sustainability of those businesses, what are the management, driving those businesses, and risk reward of investing. So I always look at combination of these three factors when I look at investing, and I do believe the risk reward of investing in equity is definitely in favor from a long term perspective. Then you got to find good businesses and great management from across all market caps. In fact, if you can find in a smaller cap, it is great, but large caps also compound 18-20% really very well. So I would say that use the uncertain times to build your portfolio, because it is the uncertain times which gives you good bargains, good value, which when the time becomes reasonably comfortable and certain and risk-taking kind of environment, that time valuations rise, share prices rise, and also economy will do well. So I think combination of these factors will help generate good returns. So look at from a, as I said, SIP or systemic over next 4, 5, 6 months, in as much as depending on the risk appetite, and be prepared for, if let us say there is a 5-10% correction in market for some reason, then you should be prepared for. But otherwise, I think markets are in good direction and well placed.
All right. Because if you look at the data, and I just want to rattle on some numbers here, when you look at financials, banks, they really have performed quite well. If you look at the Nifty Bank, in the last 4 years since the last elections, we've seen 135% of gains there. Nifty Next 50 is 106% up. Nifty MNC is 100% up. Nifty Low Volatility 50 also is more than 100% on the higher side. So there has been a lot of better performance that we have seen since the last elections. Do you see the money continuing into these areas as we move ahead from here?
So financials has been a great part of the Indian markets and will continue to remain reasonably good part. If you see in financials, especially private sector bank, and if you take the PSU and corporate banks out, I think the profitability growth has been reasonably in the range of 17, 18, 19% range. So I think there has been reasonably good growth in the sector, and I see this sector continue to grow over the next 5-7 years, because for a long time, because I think the financial inclusion, financialization of the assets, I mean there are lots of trigger, growth of credit, all those things are at very early stage, and we will continue to see them doing well. And in fact, more and more new sort of segments are getting added, whether it is insurance, wealth management platforms, asset management platforms. So you will see this basket will do well, and one should definitely have a good amount of exposure to this, because this is a slow and steady compounder kind of segment. Secondly, I think Indian consumption space will always be reasonably strong as the per capita income keeps on going up. As we get to $3,500 per capita income over the next 5-7 years, you will see consumption basket rising, and as the consumption basket rises, obviously some of the incumbent players will grow in that pace. So I think in that basket I would always recommend people to have exposure. And third basket is around the investment bucket, which is industrial capex or private capex picking up, and I do believe that in that basket also we will see interesting compounders over the next 3-4 years, because we have had a long period of no capex, especially on the private side, which is beginning to pick up, and I think this is the early stage of private capex picking up, and you will see here also reasonably good stocks to play for. So I think these are the baskets I would probably play in this cycle.
Vikas, I also want to rattle on some top Nifty gainers here, and as you mentioned, it really has been about financials and the banks here. But when you look at the stock specifics like a Titan or an HPCL, we've seen nearly 300% gains into that one. This is of course since April 2014, and then you have the likes of UPL, which is up 385%, Bajaj Finserv gained 790%. I'm just rattling these numbers to you. The best of the gains that we've seen in Nifty is Bajaj Finance, 1470% up in last 4 years really. Are you looking at putting money further here, even after the kind of gains that we have seen in these space?
So as I said that every sort of market cycle would have its own winners and losers. Banking, I feel, out of this basket will continue to perform, because I don't see any reason why that should change. Same thing, Titan falls into consumer basket, and I do believe that it may not be Titan this time as much as with the stellar performance as it had done in the last 5 years, but probably could be somebody else. So that I think these two baskets will continue to give winners. I am not particularly very sure of what's going to happen on the PSU side. It really depends on what kind of policies government have. in terms of addressing their government structure, or in terms of their businesses, giving them independence, and lots of stuff goes on there. So I'm not really sure on that. But I would say between financial and consumer basket and private investment basket, you will have lots of, these are the three segments probably would lead the market from here on over the next 5 years.
Because how would you say elections feature in the large scheme of things? Long-term investments, when you're looking at creating prosperity with an investment idea of, let's say, 7 years to 10 years, how should one make use of this event and the volatility that comes with it, really?
I think, it is important from a short-term volatility perspective. It is also important from saying that what are the likelihood of the continuity of the policy framework which government has set out. In that context, you have to see and revisit your portfolio. But I don't think otherwise in a very long period of time, if you see, it really matters. Because I think in India, by and large, most of the governments have been reformist, give or take, some. But this government has been really, carried out major reforms, taken, steps which can put India into a really different trajectory. So, that can make a big difference in terms of giving a super growth cycle. And I do believe that, whatever this government has carried out over the last 5 years, some really, game-changing reforms, whether it is GST, IBC, RERA, lots of them are there, I think, and they will, in my opinion, put India into a very different growth orbit over the next 5-7 years. And hence, the continuity of this government is important. Otherwise, I think over a long period of time, it really doesn't matter as long as there is a slow and steady reformist continuity of, under any government.
While, of course, Vikas, as you also said, and as we keep talking to other experts on the channel, there is an expectation of a second term of the current government as well. So, a lot of buzzwords that we have been hearing, at least in last few months, have been the agriculture sector, the infrastructure, education, healthcare, etc. What is your sense and view on these space?
So I think if this government comes, you will see a very wide, growth. But I think the segment which I mentioned are the biggest beneficiary of that. And I'm sure there will be some pockets outside as well. So one can't really. But I think the three segments, banking will really do well, because if you can't have economic growth without banking having grown, so that will definitely be there. Same thing, consumption will grow if government pushes growth and per capita income goes up. Definitely you will see consumer segment doing well, and same thing private. So I think the segment which I mentioned are well aligned to the policies of this government if this comes back. The good part is that if, let us say, assuming something untoward happens, there is not too much which can be undone in terms of what this government has done, which will derail these three segments.
Well, that point is well taken, and thank you so much, Vikas, for joining us with that. So those are the three sectors that Vikas is looking to bet on at the uncertain times that we are in right now. That is elections really as an event. So it is going to be banks, consumption and private, which he feels will continue to perform quite high in the years to come. We are joined by Deven Choksey, MD KR Choksey Investment Managers. Deven, hi, thank you so much for your time. The first question really remains the same. We see a lot of volatility and uncertainty pre and post-election. What is your sense with the equity markets having witnessed a strong run already? Will you say there is still much more upside from here?
Well, I think what I'm observing is that out of 24 instances of past, around 23 instances markets have rallied in the pre-election period, and in almost all instances I think the markets have also rallied, I think even post-election, but not as much as it would have run, I think, in the pre-election period. So there is no particular quantum of jump, I think, which you can probably quantify as, but generally I think from as low as 5% to as high as 25% kind of a rally has happened in the pre-election period in many of the cases, given this 24 times of election related, I think, situation that we have analyzed. So there is no doubt in my mind that I think we are in a similar situation today as well, wherein the market could possibly rally, and it has rallied partly. Currently I am observing that the market is under some amount of correction for the rally or the rise that it has taken in last few weeks. Particularly because of, I think, the larger part of the money has also come from the FII side through the ETFs. That has brought in a lot of liquidity related pressure into the market, and as a result of which I think the market went up on the indices. More importantly, the mid caps and the small caps, which are completely beaten down, I think they have probably recovered in the month of March. So that's a very smart move that I would like to call it as. Overall, I feel that I think the fabric this time around is slightly different compared to the earlier fabric. This time around, majority of the participation is coming also from the ETF side, which is I think the liquidity driven, and also the fact that I think the India as a economy, India as a growth story, probably I think is far better placed today than ever before in the past that we have experienced in last few many elections. So from that perspective, my confidence says that we do have the pre-election rally, but most likely I think if the valuation sustains, then probably I think we might see a continued rally with albeit correction even in the post-election. So we remain relatively more optimistic at this point of time on the prospects of rally continuing post-election as well in this time because of the growth in the earnings, which is looking far better than what it was in earlier periods.
All right. Deven, let me throw another question at you rather. What if the current government does not repeat the next term? Will the markets then take it in stride, or do you see a profit taking coming?
So with current government as well, I think the global cues will probably play an important role in the subsequent period post-election. So there is no argument on that aspect because they would probably determine and direct the markets for the further upside going forward. However, I think the pertinent question is that if this government is not coming back into power, then what happens? Well, I think the initial reaction would be negative. Undoubtedly, I think we are not doubting that part of it. But the fact is that I think the market would stabilize after those negative jerks, as we may want to call it as. At this point of time, I think the market is fully factoring that the current government would probably come into the power. And that is where I think the markets are getting discounted also at the same time. So pre-election, I think quite a good chance that the market would discount the current government coming into the power. And should that happen, then probably post-election you might see some amount of correction in the market, which is very natural. Currently, I think there are no negative expectations as far as I think the continuity of this government is concerned. So that is where I think the market is pricing in current scenarios.
Okay. Since you said that the markets have run 23 times out of 24 in last elections, with the view that equity markets are quite stretched, do you at all see an opportunity to buy into commodities?
So our view on the commodity is that on one side the volumes are going to increase and that will keep the price rise pressure under check. Also on the other side, the input costs for the commodities are likely to remain under check. You look at the crude oil, and the crude oil is unlikely to move up in hurry either. At the same time, I think even if it has formed the range between $55 to $65 per barrel, in a given situation it might probably cross $65, but it could not sustain at such high levels. So we believe that the input cost I think would remain under control for commodity. On the other side, the supply scenario is emerging very strong. So definitely I think it will not allow the commodity prices to go up. So in our viewpoint, I think the commodity will be best played on efficiency and the...
I get that. Deven, also another thing is the rupee market. Let's talk currencies as well. And we have seen very volatile rupee in 2018 and now in 2019 also. How are you playing this? Because there is a sentiment impact on all asset classes from currency.
So on one side, we continue to see higher amount of inflows as far as I think the dollar is concerned in the country. And that is possibly keeping the rupee under proper check. And at the same time, I think what we believe that I think the money which has come through the portfolio money or ETF money that we are talking about, I think is going to be there for a little shorter period of time, because I think they may probably want to exit post-election. Say for example in 2019, if you want to see whether I think this ETF money will sustain, my take would be that I think somewhere in July to September quarter we might not see that sustenance of money, that might get flight. So and it will probably get pulled out of the market. So that time again I think the rupee might depreciate. But as of now, I think our reading says that somewhere between 69 and 71 range.
All right, so 69 to 71 is where we can see rupee. Very quickly before we let you go, David, if the Modi government gets the second term, and as you said, that is a probability that the markets are factoring in, what sectors then would you want to put monies in?
See, if I have to put across the priority across all the sectors, I think certainly without hesitation I would say financial would be the first priority, because generally credit offtake would determine the success of other sectors. So certainly I think the credit offtake is likely to be on a higher side, and that is where financial would be my choice of preference on a priority side. Going forward, what else can probably move? As I said that I think more amount of money in hands of people. On one side, consumption related sectors probably would see the advantage coming into them. On the other side, savings related sectors going, I think they will be having the advantage. On the saving side of the sector, I think that we want to probably select the companies within that. It would be the insurance and the AMCs, where we clearly see that the growth probably would be on a higher side. It would be on a different trajectory. On the consumption side, certainly I think our approach would be to look at autos very favorably, and within autos, commercial vehicles, I think, which is where we believe that in the near term you could possibly see a relatively higher amount of growth. Elsewhere, the infrastructure assets, as you mentioned, I feel, and as I said little earlier as well, I would think that I think some of the larger funds, they will have to participate into the economy for investment to infrastructure segment, because they are generally 25-40 years horizon, and for which I think you require the money which normally wants to stay in the economy for longer period of time. So that is where I think you would probably see the emergence of some of the pension funds, endowment funds, insurance companies would bring the pools of money, or the even sovereign funds I think will bring the money into these sectors. So, but individual investors and the mutual fund investors, as I said, I think the saving on one side, consumption on the other side, including the financials, I think, which will probably demand higher amount of look in the portfolio.
Well, that point is very well taken. Yes, financials and consumption, insurance, AMCs and auto and commercial vehicles within that is the top choice coming in from Deven Choksey. Deven, thank you so much for joining us and giving us a sense on what really should the investors be putting money in at the time of elections. But with that, that's all the time that we have on this edition of NSE Prosperity Day. Many thanks for watching. News and updates continue on the other side.
NSE and CNBC-TV18 present Prosperity Day.